Good morning, students. The topic of today's lecture is in continuation of my earlier lecture taken on the 11th Feb. And we were discussing tax audit and ethical compliances. Okay. So, we discussed part A of the tax audit. And in part A, we saw that, normal basic details have to be shared in the tax audit, like name, PAN, name of business, all those things, principal base of business, address of business, all those things were discussed in part A. And we analyzed clause by clause. Now, moving on further in Form 3CD, D for Denmark, in Form 3CD, Part B. So, Part B is in fact a more detailed analysis talking about various sections of the Income Tax Act under which you have to, as a tax auditor, do the reporting. You have to verify the SEC's books, you have to see various sections requirements, and then fill up Part B. So today we'll do clause by clause analysis of Form 3CD Part B. First part is that. The second part is select case study based analysis. So we'll be discussing two case studies wherein practically we'll apply these provisions of Form 3CD and see what our answers come. So, two learning objectives. First is clause by clause analysis of part B of Form 3CD, and second is selected case studies based analysis. So, let's move forward to Form 3CD Part B. Till clause 8, all the clauses were contained in part A. Now the clauses are contained in part B. So they are in continuation. The number is in continuation. And the first one is clause 9. What are the particulars 9A? If firm AOP indicate name of partners, members and their profit sharing ratios. तो अगर फर्म या एओपी है तो नाम बताने हैं पार्टनर्स के और प्रॉफिट शेयरिंग रेशियो उनका कितना है. What is the reporting requirement? Where assessee is a firm, AOP or BOI, the names of profits and their profit sharing ratios have to be stated. In case they act in a representative capacity, beneficial partner or member should be stated. Should be verified from an instrument or agreeing evidencing partnership. तो ये क्लाइंट ने बोल दिया और हमने मान लिया, ऐसा नहीं होगा. आप जो भी इंस्ट्रूमेंट है, पार्टनरशिप डीड है या एलपी एग्रीमेंट है या एओपी का कोई एग्रीमेंट है, तो वह आप वेरीफाई करेंगे एंड उसके बाद उसको बताएंगे. सर्टिफाइड कॉपीज ऑफ डीड्स, डॉक्यूमेंट्स एक्सेट्रा शुड बी ऑब्टेन्ड इफ रजिस्टर्ड. हो जो भी डीड्स डॉक्यूमेंट्स है उसकी सर्टिफाइड कॉपीज ऑब्टेन करनी है. In case of AOP BOI, where shares of members are indeterminate, the relevant fact should be stated. तो अगर ऐसा कोई केस है जिसमें AOP BOI में जो मेंबर की शेयर्स है वो डिटरमाइन नहीं कर सकते, दोज आर इनडिटर्मिनेट, देन ये फैक्ट हमें वहाँ पे मेंशन कर देना है. नेक्स्ट इज 9B. Any change in the partner's members' profit sharing ratio since last day of the previous year. So the particulars of such change must be stated. All the changes occurring during the entire previous year must be stated. तो कुछ भी चेंज हो रहा है प्रॉफिट शेयरिंग रेशियो में लास्ट डेट ऑफ प्रीवियस ईयर, लेट्स से अभी आप टैक्स ऑडिट कर रहे हो 24-25 की, तो लास्ट डेट ऑफ प्रीवियस ईयर क्या थी? 31 मार्च 2024. तब से लेके उस पूरे साल में अगर कुछ भी चेंज हुआ है प्रॉफिट शेयरिंग रेशियो में तो वो पर्टिकुलर्स यहाँ पे मेंशन होंगे. और अगर एक से ज़्यादा बार चेंज हुआ है, 2 बार चेंज हुआ है, 3 टाइम्स चेंज हुआ है, 4 टाइम्स चेंज हुआ है, तो सारे चेंजेस को यहाँ पे हम लिस्ट डाउन करेंगे. नेक्स्ट इज क्लॉज 10A. क्लॉज 10A deals with nature of business or profession, nature of every business if more than one. So what you have to report here is the principal line of business, sector and subsector in which business or profession falls, along with the code is to be reported, nature of each service if person belongs to a service sector. तो जो भी बिजनेस की प्रिंसिपल लाइन है और उसका जो रेलेवेंट कोड है वो यहाँ पे रिपोर्ट करना है. और अगर आप किसी सर्विस सेक्टर पर्सन की टैक्स ऑडिट कर रहे हैं तो वो जो भी सर्विसेज प्रोवाइड करता है उसकी ईच सर्विस का नेचर हमें यहाँ पे मेंशन करना है. देन सिमिलरली अगर कुछ चेंज है, सो एनी चेंज इन द नेचर ऑफ बिजनेस और प्रोफेशन, देन पर्टिकुलर्स ऑफ सच चेंज. Any material change, including change from manufacturer to trader, as well as change in principal line. Any addition to other than temporary discontinuation of a business may require reporting. Material change चाहिए, कोई भी और अगर फर्दर एडिशन है अदर देन टेम्पररी डिसकंटिन्यूएशन वो भी रिपोर्ट करना है. Review of minutes of meetings or business report, necessary inquiries, declaration from assessee regarding change may be obtained. तो जब आप कर रहे हो तो वही बात की क्लाइंट ने बोल दी और हमने एक्सेप्ट कर लिया, वो नहीं होता है. Ask the client for the minutes of the meetings or the business report, necessary inquiry करेंगे हम क्लाइंट से, उसे डिक्लेरेशन भी मांगेंगे. In a case of a reorganization, reference to be made only if new line of activity emerges or any line of activity is being hived. अगर कोई रीऑर्गेनाइजेशन हुआ है, दैट मीन्स अगर कोई रीस्ट्रक्चरिंग होती है, तो उस पर्टिकुलर केस में आपको जो नेचर ऑफ एक्टिविटीज में फोकस करना है वो हमें करना है. बेसिकली कोई एक नई लाइन ऑफ एक्टिविटी इमर्ज हो रही है या जो कोई और एक्टिविटी अगर वो खत्म कर रहे हैं हम, तो वो मेंशन करनी है यहाँ पे. देन क्लॉज 11A, whether books of accounts prescribed under section 44AA, if yes, list of books prescribed. So whether क्वेश्चन है कि बुक्स ऑफ अकाउंट्स जो 44AA उस पे लगता है क्या, और क्या आपने वो मेंटेन करे हैं. अगर यस आपने मेंटेन करे हैं तो व्हाट इज द लिस्ट ऑफ दोज बुक्स प्रिस्क्राइब. नाउ व्हाट आर द रिपोर्टिंग रिक्वायरमेंट्स. सो रिपोर्टिंग रिक्वायरमेंट्स डिस्कस करने से पहले वी शुड नो द रेलेवेंट प्रोविजंस. यहाँ पे क्या क्या है. सो सेक्शन 2 सब सेक्शन 12 वे बुक्स को डिफाइन करते हैं और बुक्स में क्या बोलता है. बुक्स इंक्लूड्स लेजर्स, डे बुक्स, कैश बुक्स, अकाउंट बुक्स एक्सेट्रा, वेदर इन रिटन, इलेक्ट्रॉनिक, डिजिटल और प्रिंट आउट फॉर्म. तो आप बुक्स ऑफ अकाउंट से सबको पता है, हम लोग ने सबने अकाउंटिंग पढ़ी हुई है. उसमें बुक्स में आपको क्या क्या हो जाता है. लेजर्स हो जाते हैं, डे बुक्स हो जाती है, कैश बुक्स, अकाउंटिंग बुक्स, और भले ही वो हैंड रिटन फॉर्मेट में हो या डिजिटल फॉर्म में हो या टैली में हो. देन सेक्शन 44AA सबसेक्शन 1, रूल 6F प्रिस्क्राइब्स बुक्स टू बी मेंटेन बाय सर्टेन बिजनेस और प्रोफेशन. कौन कौन सी बुक्स मेंटेन करनी है बाय सर्टेन बिजनेस और प्रोफेशन, वो 44A1 प्रिस्क्राइब करता है. देन 44AA2, where not covered under one above shall maintain books and documents so as to enable the AO to compute income if his turnover or income is greater than the limit prescribed under 44AA. तो अगर वन में कवर नहीं हो रही हो, तो अगर आप प्रॉपर फुल बुक्स नहीं मेंटेन कर पा रहे हो, तो एटलीस्ट उतनी बुक्स और डॉक्यूमेंट्स मेंटेन करनी है सो दैट जो असेसिंग ऑफिसर अगर आपकी इनकम कंप्यूट करना चाहे तो वो उस बुक्स के बेसिस पे कर पाए. Then clause B of 11, list of books maintained and address at which kept. If books kept at more than one location, address of each location along with the details of books mentioned thereof. अगर आप मेंटेन कर रहे हो एक से ज़्यादा लोकेशन पे तो हर लोकेशन का एड्रेस हमें मेंशन करना है और हमें डिटेल भी मेंशन करनी है कि कौन कौन सी बुक्स मेंटेन कर रहे हैं. If books maintained through computer system, address of place where server is located or principal place of business or head office. अगर कंप्यूटर में बुक्स मेंटेन करते हैं हम, फिजिकली नहीं करते, मैनुअली नहीं करते, तो कहाँ पे आपका सर्वर लोकेटेड है या फिर कहाँ पे आपका प्रिंसिपल प्लेस ऑफ बिजनेस है या हेड ऑफिस है. If books are stored on cloud, IP address of the same may be reported. अगर क्लाउड पे स्टोर्ड है तो IP एड्रेस रिपोर्ट करना है. Tax auditor should obtain a complete list of books and other documents maintained by him and make appropriate marks of identification. तो complete list of books उसे obtain करनी है, उसको चेक करना है और जहाँ पे भी चेक कर रहे हैं तो appropriate marks of identification उसको place करने हैं to show कि वो actually audited है. Then C, list of books of accounts and nature of relevant documents examined. Books of accounts examined would constitute books of original entry and other books of accounts. Extent of examination is also to be reported. There may be difference between books of account prescribed, maintained, and examined. Tax auditor should exercise professional judgment whether situation warrants any disclosure. Then clause 12, whether P&L account includes profits or gains accessible on a presumptive basis, if yes, indicate amount and relevant section. तो जो भी आप ऑडिट कर रहे हो उनका जो पीएनएल है, ऐसा कोई इनकम है जो प्रिजम्पटिव बेसिस पे वो लोग क्लेम करना चाह रहे हैं, और अगर ऐसा है तो क्या अमाउंट है उसका, रेलेवेंट सेक्शन. So what is the reporting requirement regarding this? Amount to be mentioned shall be amount included in P&L account. Tax auditor is not required to indicate whether such amount corresponds to amount accessible under relevant presumptive taxation. तो अमाउंट तो मेंशन करना है पीएनएल अकाउंट में कितना है, ठीक है, पर टैक्स ऑडिटर को ये लिखने की जरूरत नहीं है कि कितना असेसिबल है अंडर द रेलेवेंट प्रिजम्पटिव टैक्सेशन. Even where assessee opts for presumptive taxation, tax auditor should impress upon the assessee that it would not be advisable to maintain some basic records to support the. It would be advisable to maintain some basic records to submit the or to support the gross receipts or the turnover. तो इवन व्हेन assessee अगर ऑप्ट कर रहे हैं प्रिजम्पटिव टैक्सेशन के लिए तो दैट डजंट मैटर, उसको एटलीस्ट ये होना चाहिए कि जो बेसिक अकाउंटिंग रिकॉर्ड्स है, बेसिक रिकॉर्ड्स है, वो मेंटेन करें. Then we move forward to clause 13. Clause 13 deals with A part, method of accounting employed in a previous year. So section 145 हमने पहले भी पढ़ा था. It prescribes method of accounting, and what it says is books of accounts should be maintained either under the cash system or the mercantile system of accounting. How hybrid system of accounting is not permitted. तो यहाँ तो आप कैश सिस्टम फॉलो करो या मर्केंटाइल सिस्टम फॉलो करो. हाइब्रिड मतलब दोनों का मर्ज्ड जो चीज़ है वो अलाउड नहीं है कि कुछ ट्रांजैक्शंस में आपने कैश कर लिया, कुछ में मर्केंटाइल कर लिया. However, the methods can be applied differently for different businesses and the method selected should be consistently followed. पर हाँ, अगर हमारे 4 बिजनेस है, 2 में मैं कैश लगाती हूँ और 2 में मैं मर्केंटाइल लगाती हूँ, तो वो अलाउड है, उसमें कोई प्रॉब्लम नहीं है. पर हर बिजनेस के लिए वो कंसिस्टेंटली फॉलो होने चाहिए. Then whether any change in method of accounting applied vis-a-vis immediately preceding year. कोई चेंज है मेथड ऑफ अकाउंटिंग में. Effect of change in method of accounting, that is increase or decrease in profit, has to be stated. Tax auditor should apply reasonable checks to ascertain whether there is any change in the method of accounting after obtaining written confirmation from the assessee. Change in accounting policy is not a change in accounting method. तो अगर कोई चेंज इन मेथड ऑफ अकाउंटिंग है तो इंक्रीज और डिक्रीज इन प्रॉफिट जो भी है वो आपको स्टेट करना पड़ेगा. दूसरा, टैक्स ऑडिटर को रीजनेबल चेक्स लगाने चाहिए कि वेदर चेंज हुआ है मेथड ऑफ अकाउंटिंग की नहीं, और उसके लिए उसको रिटन कंफर्मेशन लेना चाहिए फ्रॉम द असेसी. ही शुड नॉट रिलाई अपॉन एनी ओरल कंफर्मेशन. Then C is in continuation to B. It says if answer to 13B is affirmative, give details of such change and effects thereof on profit or loss. So it says in case there is any change in method of accounting employed vis-a-vis method employed immediately preceding year, details of same along with impact of the profit need to be examined. As regards impact on profit, the concept of materiality is a basic governing factor. If it is not possible to quantify the effect of change in method of accounting, appropriate disclosure should be made. तो आपको इम्पैक्ट एनालिसिस करना है, क्या इम्पैक्ट होगा अगर मेथड ऑफ अकाउंटिंग चेंज होती है, और आपको जब आप ये इम्पैक्ट एनालाइज कर रहे हो तो यू हैव टू सी द कॉन्सेप्ट ऑफ मटीरियलिटी, कितना मटीरियल है, कितना नॉन मटीरियल है, एंड अकॉर्डिंगली द रेलेवेंट डिस्क्लोजर शुड बी मेड. D. Whether any adjustment is required in profit or loss for complying with ICDS. So central government has notified ICDS under 145(2) to be followed by the assessees required to get their accounts audited following mercantile system for the purpose of computation of income chargeable to tax under the PGBP or other sources. ICDS इनकम कंप्यूटेशन एंड डिस्क्लोजर स्टैंडर्ड्स आप लोगों ने पढ़े होंगे, नोटिफाई हुए हैं 145(2) में, और वो लगते हैं एसएससीज पे जो भी मर्केंटाइल सिस्टम ऑफ काउंटिंग फॉलो करते हैं उन पे लगते हैं. एंड सिर्फ बिजनेस इनकम और अदर सोर्सेज को ही कंप्यूट करने में यूज आते हैं. So auditor is required to state whether any adjustment is required under ICDS. Any increase, decrease in profit and net effect should be reported in absolute terms. Auditor should obtain draft computation form from the assessee of total income and disclosures required under ICDS, and based on books state yes if any adjustment is required and no if not so required. तो उसको ड्राफ्ट कंप्यूटेशन असेसी से लेना चाहिए और उसको ये चेक करना चाहिए कि कोई एडजस्टमेंट रिक्वायर्ड है आईसीडीएस में या नहीं रिक्वायर्ड है, एंड अकॉर्डिंगली ही विल राइट yes or no. If answer to 13D is in affirmative, give details of such adjustments ICDS wise with net effect on profit. So tax auditor is required to quantify amount of adjustment against each ICDS. Auditor may refer technical guide on ICDS issued by ICAI in July 17. In working paper file, checklists should be prepared and maintained along with computation working. Also, last year's tax audit report should be reviewed to ascertain any effect in the current year. Next point F, disclosure as per ICDS wise. This clause requires disclosure of significant income computation and disclosure policies adopted by a person for computing income chargeable under PGBP and other sources. If information furnished is based on income computation furnished by the assessee, appropriate disclosure of this fact should be maintained. Next, we move on to method of valuation of closing stock, clause 14. So, clause 14, part A. Method of valuation of closing stock employed in the previous year. क्या method लगाया अपने closing stock valuation के लिए? Then B, in case of deviation from method of deviation from the method of valuation under 145A and effect thereof on the profit and loss. तो इसके लिए क्या है हमें स्पेसिफिकली वेदर देयर इज अ चेंज इन द बेसिस ऑफ डिटरमाइनिंग कॉस्ट, market value or net realizable value, or even though there is no change in the method of valuation, auditor should understand procedure followed by the assessee in taking inventory of closing stock at the end of the year and valuation thereof. So auditor से क्या expected है कि change हो method of valuation में नहीं हो, उसको अंडरस्टैंड करना है क्या प्रोसीजर लगाया है उन्होंने इन्वेंट्री वैल्यूएशन के लिए एट द एंड ऑफ द ईयर, और उसके लिए टैक्स ऑडिटर को क्या क्या ऑब्टेन करना है. इन्वेंट्री ऑफ क्लोजिंग स्टॉक बेसिस indicating the basis of valuation, review the method of valuation adopted and compare with method adopted under section 445A, इन्वेंट्री वैल्यूएशन शीट, क्वांटिटेटिव डिटेल्स, मेथड, रेट एंड टोटल वैल्यू. ये आप लोगों ने देखी होगी, वैल्यूएशन शीट दिखती है, अगर आप टैली वगैरह में भी देखते हो तो कुछ लोग मेंटेन करते हैं. तो क्वांटिटी टू क्वांटिटी वाइज डिटेल्स, क्या मेथड लगाया है, रेट एंड टोटल वैल्यू. Then whether method is such that the value of closing stock includes tax, cess and duty actually paid or incurred. Next हम आ जाते हैं clause 15 पे. Clause 15 deals with give the following particulars of capital asset converted into stock in trade. तो अगर कोई capital asset stock in trade में convert हुआ है तो clause 15 में reporting होती है, and क्या क्या बताना होता है. Description of capital asset, date of acquisition, cost of acquisition, amount at which asset is converted into stock in trade. So इसके लिए you should first know the provisions, income tax act के क्या provisions है, so that अगर कहीं पे भी अटको तो you can at least refer the provisions. So 247 defines the meaning of transfer. Section 45 subsection 2 deals with conversion of capital asset into stock in trade deemed to be transfer. 45(2) क्लियरली बोलते हैं कि अगर आप कन्वर्ट करते हो कैपिटल एसेट इनटू स्टॉक इन ट्रेड तो वो ट्रांसफर मान लिया जाता है फॉर द पर्पस ऑफ कैपिटल गेन्स. देन proviso below to section 47 4 and 5, transfer of capital asset between holding and its subsidiary not considered as transfer if condition thereof are satisfied. However, benefit not available where capital asset transferred by subsidiary company to holding company or vice versa as stock in trade. Then 47A, transfer of capital asset by holding company to its subsidiary or vice versa not considered as transferred but such capital asset is converted into stock in trade within 8 years from the date of transfer, deemed capital gain of the previous year in which transfer took place. So, details of capital assets आपको यहाँ पे डालनी है with respect to the previous year in which the conversion took place, and no requirement of details regarding taxability of capital gains. आपको taxability पे या tax amount पे कोई comment करने की जरूरत नहीं है. Then refer accounts of the financial year in which capital assets were acquired. Date is important to determine LTCG or STCG. तो date important है long term capital asset था या short term capital asset identify करने के लिए. In this clause, cost of acquisition is as per the books of accounts. As per books of accounts, जो भी cost है वो यहाँ report होगी. Depreciable assets के लिए carrying cost appearing in books will be the WDV. Amount to be reported, original cost of acquisition. Amount recorded in books at which asset is converted into stock in trade. Such amount may not be fair market value as on the date of conversion. Then valuation of stock in trade as per AS2 or Ind AS 2. Then clause 16 deals with amounts not credited to P&L account being. So ऐसे कुछ amounts जो आपकी इनकम टैक्स की जो इनकम की डेफिनेशन है उसमें फॉल हो सकते हैं, बट पीएनएल में वो नहीं फॉल हुआ है एंड हेंसफोर्थ पीएनएल में कोई रिसीट नहीं आ रही है. तो उन अमाउंट्स के लिए यहाँ पे टैक्स ऑडिट रिपोर्ट में क्या रिक्वायरमेंट है रिपोर्टिंग की. सो ए, द आइटम्स फॉलिंग विद इन द स्कोप ऑफ सेक्शन 28, various amounts falling within the scope of section 28 which are not credited to the P&L account are to be stated. For example, benefit perquisite arising from business or profession under section 28(4) not credited in the P&L. Just a second. तो जो भी अमाउंट्स हैं जो P&L में नहीं रिपोर्ट हो रहे हैं बट एज पर सेक्शन 28 they are your business income and they will be added in your income under the income tax act, तो ये यहाँ पे रिपोर्ट होंगे. B, pro forma credits, drawbacks, refund of duty of customs, excise, service tax, refund of sales tax or VAT where these are admitted as due by the authorities. Examine all the relevant correspondence, records, assessees, particulars on portal and evidence to determine whether any particular refund or claim has been admitted as due and accepted during the financial year. Credits claims which have been admitted as due after the relevant previous year need not be reported here. If there is cash basis of accounting, it should be clearly reported by the auditor that acceptance of claim during relevant year without actual receipt has no significance. Then where amount is not credited in a P&L account but netted against income or expenditure, fact should be disclosed. C, escalation claims accepted during the previous year. So अगर कोई escalation claim है जो आपने accept करा है during the financial year, so escalation claim accepted but not credited to P&L account has to be stated here. Only claims to which the other party has signified unconditional acceptance could constitute accepted claims. Then any other item of income, any other item which the auditor considered as income, basis is verification of records, documents, and information which is not credited to the P&L account. If employee's contribution to any PF or superannuation fund is not paid on or before the due date, then it becomes income of the assessee. Similar information also furnished in clause 20B of Form 3CD. Therefore, cross-referencing may be required. कैपिटल रिसीट इफ एनी, कोई भी सॉर्ट ऑफ कैपिटल रिसीट है तो वो भी यहाँ पे रिपोर्ट होगी क्लॉज 16E में. द टैक्स ऑडिटर शुड यूज हिज प्रोफेशनल एक्सपर्टीज एंड जजमेंट in determining whether receipt is capital or revenue in nature. Capital receipts are not generally credited to P&L account, hence auditor should take enough care to check out any transaction generating the receipts of capital nature. The information under subclause A, D, and E of clause 16, given with reference to entries in books of accounts, the auditor should check thoroughly the bank account and cash book of the assessee as regards income not earned but credited to P&L. Tax auditor may obtain management representation in writing, may use his professional judgment in whether receipts are taxable under subclause A to D of clause 16. Then 17 बेसिकली 43 CA या 50C वाले केसेस से डील करता है, जहाँ पे सेक्शन ये प्रोवाइड करते हैं दैट इफ यू आर सेलिंग अ प्रॉपर्टी बीइंग कैपिटल असेट और स्टॉक इन ट्रेड एंड जो भी आपने सेल कंसिडरेशन उस प्रॉपर्टी का रिसीव किया इट्स लेस देन द स्टैम्प ड्यूटी वैल्यू ऑफ दैट प्रॉपर्टी, तो सेल कंसिडरेशन जो मान लिया जाएगा वो फेयर मार्केट वैल्यू ऑफ द प्रॉपर्टी या स्टैम्प ड्यूटी ऑफ वैल्यू ऑफ द प्रॉपर्टी को मान लिया जाएगा, आपके एक्चुअल सेल कंसिडरेशन को इग्नोर कर दिया जाएगा. सो 17 उसकी रिपोर्टिंग के बारे में बात करता है. It says where any land or building or both is transferred during the previous year for a consideration less than the value adopted or assessed or assessable by an authority of the state government referred to in sections 43C or 50C, please furnish details of the property, consideration received or accrued or value adopted or assessed or assessable. So where any land or building or both is transferred during the previous year for a consideration less than the value adopted or assessed or assessable by any authority of a state government referred to in section 43C or 50C, the auditor is required to furnish the following details. तो क्या details basically auditor को tax audit में furnish करनी है details of property, consideration received or accrued, and third is value adopted or assessed or assessable. The tax auditor has to furnish the details about the nature of the property, whether the property transferred during the year is land or building, along with the address of such property. The tax auditor should obtain the list of all the properties transferred by the assessee during the previous year. The tax auditor has to furnish the amount of consideration received or accrued during the relevant previous year of the audit, in respect of land building transferred during the year as disclosed in the books of accounts of the assessee. For reporting the value adopted or assessed or assessable, the tax auditor should obtain from the assessee relevant information with regard to sale of land, building or both during the previous year. In case the property is not registered, the auditor may verify relevant documents. तो अगर प्रॉपर्टी रजिस्टर्ड नहीं है तो जो भी relevant documents है वो relevant authority से या third party experts से like lawyers, solicitors, etc. to satisfy the compliance of 43CA and 50C. In exceptional cases where the auditor is not able to obtain the relevant documents, he may state the same through an observation in his report in 3CA, 3CB. अगर ऑडिटर ने ट्राई किया है बट कुछ एक्सेप्शनल केसेस में वो नहीं ऑब्टेन कर पाया है जो भी रेलेवेंट डॉक्यूमेंट्स है, तो वो एक ऑब्जर्वेशन क्वालिफिकेशन टाइप 3CA 3CB में डाल सकता है. देन क्लॉज 18. क्लॉज 18 डील्स विद डेप्रिसिएशन अलाउएबल. डेप्रिसिएशन सबको पता है सेक्शन 32 इनकम टैक्स एक्ट का, उसकी अलाउएबिलिटी को एग्जामिन करने के लिए क्लॉज 18 है. और क्या क्या वहाँ पे आपको एग्जामिन करना है? क्लासिफिकेशन ऑफ द सेट, classification thereof to a block, actual cost or WDV of the set, the date of acquisition and the date on which it is put to use, the applicable rate of depreciation, the additions, deductions and dates thereof, adjustments required specified as well as on account of sales, then depreciation of asset or block of asset. अब rate of depreciation determine करने के लिए क्या करना है आपको, क्योंकि आप रेट वेरीफाई करोगे एंड मेंशन करोगे कि क्या रेट लगेगी. So for determining the rate of depreciation, examine the classification of the sets into the blocks and as whether as made by the assessee is in consonance with legal principles. Traverse through judicial pronouncements, past assessment history. If he comes to the conclusion that the matter is not free from doubt or controversy, indicate the fact by way of a suitable qualification. तो आपको रेट ऑफ डेप्रिसिएशन के लिए सबसे पहले क्लासिफिकेशन देखना पड़ेगा कौन से ब्लॉक के लिए है और वेदर जो डेप्रिसिएशन ले रहा है वो सही लीगल प्रिंसिपल्स या जुडिशियल प्रोनाउंसमेंट के बेसिस पे है. पास्ट असेसमेंट हिस्ट्री भी देखो, अगर पास्ट असेसमेंट्स में डेप्रिसिएशन का क्लेम लिया था और वो चैलेंज हुआ है तो वो भी देखना है. ठीक है. and the auditor may rely upon technical data for determining the proper classification of the block by obtaining suitable certificate from the expert. Then rate of depreciation में क्या लिखना है? The tax auditor must have due regard to the Income Tax Rules 1962, relevant clarifications from the department and judicial decisions. Under sub clauses A to B, information in respect of description of assets, classification of block of assets, and the rate of depreciation are to be stated. In respect of the existing assets, this would involve stating the opening WDV, जो आप income tax records में से लोगे, and then the tax auditor should ensure the opening block of assets matches with the income tax return filed for the immediately preceding previous year. Then C, actual cost or WDV as the case may be. The tax auditor has to be guided by the relevant legal provisions. Since determination of actual cost has got accounting implications, he can rely on the relevant AS and guidance notes. Depreciation is also allowable on intangible assets. From 1/4/2021, intangible asset being goodwill does not qualify for depreciation. The tax auditor should examine this and the basis on which the cost of such intangible assets has been arrived at. देन आपका मेजरली आ जाता है एडिशंस डिडक्शंस और ये वाली सारी चीज़ें. So addition, deductions during the year, the date of put to use, and then adjustment on account of SENVAT credits, change in rate of currency, subsidy or grant or reimbursement. Now first is asset purchased in foreign currency on deferred payment basis. Verify the actual cost on the basis of section 43A. Addition or reduction will be limited to the exchange difference actually paid during the year. The tax auditor is required to verify that the adjustments in the cost of the fixed assets on account of changes in the rate of exchange of currency in the schedule of fixed assets prepared for computation of depreciation as per IT rules are in accordance with the provisions of 43A, and information about such adjustment is to be provided in clause 18D2 of form 3CD. The provisions of section 36(1)(3) and explanation 8 to 43(1) and explanation 10 to 43(1) should be kept in mind for capitalization of interest to the cost of assets, and treatment of subsidy or grant shall not be included in the actual cost of the asset to the assessee. Agar cost of asset, cost of acquisition is greater than 10,000 and paid otherwise than by account, pay, check or bank draft or use of ECS, electronic clearing system, then such expenditure shall be ignored for determining the actual cost. The tax auditor should also verify that the amount of GST input credit deducted from cost of capital goods tallies with the credit availed on this account. To ascertain when the asset has been put to use, put to use, the tax auditor could call for basic records like production records, installation details, excise records, title deeds, or building completion certificate, etc. In the absence of any specific documentation with regard to the effective date from which the set is put to use, he could get a management representation letter. अगर जो required information है वो नहीं मिल रही है, then you could ask for a management representation letter. Then regarding depreciation allowable and WDV at the end of the year. The amount of depreciation and WDV of the block at the year end is calculated correctly. The tax auditor shall check the WDV at the beginning of the year in respect of each of the block of the assets. Wherever a claim for depreciation involves any reliance on any judgment or opinion or other contention, it may be advisable for the tax auditor to disclose full particulars thereof and the basis on which depreciation allowable has been determined and vouched by him. Then clause 19, amounts admissible under sections 33AB, 33ABA, 35(11), 35(12), 35(1)A, 35(13), 35(14), 35(2AA), 35(2AB), 35ABA, 35ABB, 35AD, 35CCA, 35CCC, 35CCD, 35D, 35DD, 35DDA, 35E2, and any other relevant section. So, in case the assessee has obtained a separate audit report for claiming deductions under any of these sections, he must make a reference to that report while giving the details under this clause, indicate the amount debited to the P&L and the amount actually admissible in accordance with the applicable provisions of the law. The amount not debited but admissible under any of the sections mentioned in the clauses have to be stated. Examine whether the assessee is eligible for deduction under the relevant section, the deduction is correctly computed, and whether the assessee fulfilled all the conditions specified, including approval from the relevant or the prescribed authority. In case auditor relies on a judicial pronouncement, he should mention that fact. Then, clause 20, part A. Any sum paid to an employee as bonus or commission for services rendered were otherwise payable as profits or dividends. 36(1)(2) basically. Deduction of any sum paid to an employee as bonus or commission for services rendered where such sum would not have been payable to him as profit or dividend if it had not been paid as bonus or commission. The tax auditor should obtain the list of employees eligible for bonus or commission for services rendered with amounts and check the basis of calculation of bonus or commission. Details of contributions received from employees for various funds as 36 reference 36(1)(5)(a) section. So section 36(1)(5)(a) permits deduction of any sum received by the assessee from any of his employees to which the provisions of section 224(10) are applicable if it is credited by the assessee to the account of the employees in the relevant statutory fund on or before the due date. Under this clause, the requirement is only in respect of the disclosure of the amount, and the tax auditor is not expected to express his opinion about its allowability or otherwise. The tax auditor should get a list of various contributions recovered from the employees which come within the scope of this clause and the date on which it is deposited. He should also verify the documents relating to PF and other welfare funds. He should verify the agreement under which employees have to make contributions to Provident Fund and other welfare funds. The ledger account of contributions from employees should be reviewed. The due dates of payments and the actual dates of payments should be verified with the evidence available. In view of the voluminous nature of the information, the tax auditor can apply test checks and compliance tests to satisfy himself that the system of recovery and remittance is proper. Then let's move forward to clause 21. So it deals with the details of amounts debited to the P&L being in the nature of capital, personal, advertisement expenditure in any souvenir, brochure, tract, pamphlet, or the like published by a political party, expenditure incurred at clubs, expenditure for any purpose which is an offense or is prohibited by law, or expenditure by way of penalty or fine for violation of any law enacted in India or outside India, expenditure by way of other penalty or fine not covered above, expenditure incurred to compound an offense under any law for the time being in force in India or outside India, expenditure incurred to provide any benefit or perquisite in whatever form to a person, whether or not carrying on a business or exercising a profession, and acceptance of such benefit or perquisite by such person is in violation of any law, rule, or regulation or guideline as the case may be for the time being in force governing the conduct of such person. So what are the reporting requirements over here? Capital expenditure is not allowable in computing business income unless specifically provided in any sections of the Act. The details of capital expenditure, if any, debited to the P&L should be maintained in a classified manner, stating the amounts under various heads separately. The total amount of capital expenditure debited to the P&L is to be reported under this clause in the e-filing portal. Personal expenses debited to P&L are to be specified under this subclause as they are not deductible in the computation of total income under Section 37. Then Section 143(1)(e) of the Companies Act 2013 specially requires the auditor to inquire whether personal expenses have been charged to revenue account. In case of a person whose accounts of the business have been audited under any other law, The tax auditor will have to report in respect of personal expenses debited in the P&L. In the case of a person who is not required by or under any other law to get his accounts audited, the tax auditor will have to verify the personal expenses. If debited in the expenses account while conducting the audit and verify the amount of expended mentioned under this clause. Then section 37 2b. No allowance shall be made in respect of expenditure incurred by an assessee on advertisement in any souvenir, brochure, tract, pamphlet published by a political party. Therefore, the expenditure of such nature is to be segregated and reported in this clause. The auditor may also keep in mind the provisions of section 80 GGB and 80 GGC, which allow deduction in respect of contribution made by corporate and non-corporate assessees, respectively to political parties and electoral trust, as required to be reported by him in clause 33 of Form 3CD. The amount of payments made to clubs by the assessee during the year being cost for club services and facilities used should be indicated under this clause. The fact whether such expenses are incurred in the course of business or whether they are of personal nature should be ascertained. If they are personal in nature, they are to be shown separately under clause 21A referred to earlier. This clause requires separate reporting of any expenditure incurred by an assessee for any purpose which is an offense or which is prohibited by law. It also requires reporting of expenditure by way of penalty or fine for violation of any law enacted in India or outside India. This clause covers only penalty or fine for violation of law and not the payment for contractual breach or liquidated damages. The tax auditor should keep in mind the difference between the amount prohibited by law and the amount paid, which is compensatory in nature under the relevant statute. Supreme Court in Mahalakshmi Sugar Mills and Hyderabad Allian Metal Works, wherein it was held that when an amount paid by the assessee could be regarded as compensatory in character, then it would be allowable under 37(1). And if it were penal in nature, it was not allowable. Tax auditor is not required to express any opinion as to the allowability or otherwise of the amount of penalty or fine for violation of law. He is only required to give the books of such items as have been charged in the books of accounts. This clause requires specifically to report any benefit or perquisite in whatever form to a person, whether or not carrying on a business or a profession, where acceptance of such benefit or perquisite by such person is in violation of any law, rule, or regulation or guideline, as the case may be for the time being in force, governing the conduct of such person. The tax auditor should obtain the list of beneficiaries. The tax auditor should obtain the list of beneficiaries in respect of whom tax has been deducted under 194R to form an opinion as to whether any benefits and perquisites are inadmissible and require reporting under this clause. In case the tax auditor is of the opinion that any amount debited to the P&L is to be disallowed as per section 37 and hence has to be reported under this clause, then reporting need not be done under clause 21B on amounts inadmissible under 40 AIF for non-deduction of tax at road. Appropriate disclosure should be made in the audit report in respect of such transactions in the observation in para 3 of Form 3CA or para 5 of Form 3CB as may be applicable. Then the next is amounts which are inadmissible, जो allow नहीं होते हैं law में. So amounts inadmissible under section 40AIA or 40AI of with the details of payments on which TDS has not been deducted or after deduction has not been paid before the due date specified under 139(1), which is filing of return, and the amount is inadmissible under section 40A2B, 40A2, 40A4 or 40A53. So 40A specifies certain amounts which will not be deducted in computing the income chargeable under the head PGBP. 40AI, 100% disallowance attracted with respect to sum paid or payable to a non-resident. 30% disallowance attracted with respect to sum paid or payable to a resident payee on tax deductible at source, and such tax has not been deducted or after deduction has not been paid on or before the due date of furnishing of return of income. Under this clause, the tax auditor is required to report the details of payments on which tax is not deducted at source, and also the details of payment on which tax has been deducted but not paid during the previous year before the due date of filing the return of income under 139(1). The tax auditor is advised to give details under this clause for each individual payee. Subclause 48(2)(b) provides that any amount paid by way of royalty, license fees, service fee, privilege fee, service charge, or any other fee or charge by whatever name called, which is levied exclusively on or which is appropriated directly or indirectly from a state government undertaken by the state government, is an inadmissible expenditure. The tax auditor should verify any such payment made by state government undertaking to the state government and should report under this clause. The amount of salary which is paid outside India or to a non-resident on which, in respect of which, tax has not been deducted but which is required to be deducted under the applicable provisions, or tax has not been paid after deduction, is not allowed as a deduction under 48(3), and the same is required to be reported under this subclause. This information is required to be given for each individual payee. The tax auditor should also furnish the date of payment along with the name and address of the payee. Section 48(4) provides that any payment to a provident or other fund established for the benefit of employees of the assessee shall be disallowed unless the assessee has made effective arrangements to secure that tax has been deducted at source. So, unless the assessee has made effective arrangements to secure that tax shall be deducted at source from any payments made from the fund which are chargeable to tax under the head salaries, the tax auditor is also required to report the same under this subclause. So, any tax paid by an employer on non-monetary purposes is exempt in the hands of the employee as per section 1010(c). Further, as per section 48(5), the tax paid by the employer on non-monetary purposes provided to employees shall not be deductible in computing profits and gains from PGBP. The tax auditor is required to report the amount of such tax paid by the employer in case it is debited to the P&L account under this subclause. For this purpose, the tax auditor may examine the books of accounts and the tax deduction forms. In case where the assessee submits that any sum debited to the P&L is not inadmissible under the provisions of 40A, the tax auditor may exercise his judgment in the light of the applicable laws and report accordingly about the compliance of this provision. The tax auditor may rely upon the judicial pronouncements while taking any particular view. In case of difference of opinion between the tax auditor and the assessee, the tax auditor should state both the viewpoints. कोई भी difference है opinion का tax auditor और assessee के बीच में, तो दोनों viewpoints उसको बताने होंगे. In case of voluminous nature of the transactions or information, the tax auditor can apply materiality principles, test checks, and compliance tests for verifying the information required to be provided under this clause. Amounts debited to P&L account being interest, salary, bonus, commission, or remuneration are inadmissible under 40B or 40BA and computation thereof. Tax auditor is required to state the inadmissible amount under 40B and 40BA, and such information is also required to be given in respect of interest remuneration paid to a member of an AOP or BOI, the inadmissible remuneration or salary, bonus, or commission under 40B has to be determined on the basis of the provisions of subclause 5 of 40B, read with the limits laid down therein. Such limits are laid down as a percentage of the book profits. It is advisable for the auditor to obtain from the assessee a detailed working of the inadmissible remuneration, salary, bonus, or commission under 40B. He has to verify the computation from the instrument or agreement or any other document evidencing partnership, including any supplementary documents or other documents effecting changes. So under 40B4, any payment of interest to any partner which is authorized by and is in accordance with the terms of the partnership deed and relates to any period falling after the date of such partnership deed insofar as such amount exceeds the amount calculated at the rate specified under the IT Act from time to time will not be admissible as a deduction. And then Section 40BA lays down that any interest or remuneration paid by an AOP to its members shall not be allowed as a deduction to the AOP. In order to determine the amount inadmissible under 40B, the tax auditor should obtain the computation of total income from the assessee. The tax auditor may note that the information required to be reported is the amount of inadmissible expenditure as per 40B, 40B, and not the total amount debited in the P&L account. Then disallowances under section 48.3 and deemed income under section 48.3A. On the basis of examination of books of accounts and other relevant documents or evidence, whether the expenditure covered under section 48.3 or 48.3A read with rule 6DD were made by account pay checks drawn on a bank or account pay bank draft or use of ECS through a bank account or through such other electronic mode as may be prescribed. If not, please furnish the details of date of payment, nature of payment, amount, name and PAN and Aadhaar number of the payee if available. So the tax auditor, so क्या है? So you know all provisions 48.3 में cash payments के, but एक बार देख लेते हैं. Disallowance would be made if the payment or aggregate of payments is greater than 10,000. 35,000 in case of plying, hiring, or leasing of goods carriage is made to a person in a day otherwise than by an account pay check or bank draft or use of or through electronic clearing system through a bank account or through such other electronic mode as may be prescribed. However, no disallowance would be attracted in respect of cases and circumstances prescribed under Rule 60D. Rule 60D exception है जब 48.3 नहीं लगेगा. The tax auditor should obtain a list of all cash payments in respect of expenditure exceeding the prescribed limit under 48.3A. The list should be verified by the tax auditor with the books of accounts in order to ascertain whether the conditions for specific exemption granted under Rule 60D are satisfied. Details of payment which do not satisfy the above conditions should be stated under this clause. Certain audit tools are available to find out such payments expeditiously and accurately. These tools may be employed in case the data is voluminous. Practically, it may not be possible to verify each payment reflecting in the bank statement as to whether such payment has been made through the prescribed modes. Thus, it is desirable that the tax auditor should obtain suitable certificate from the assessee to the effect that the payments for expenditure referred to in 48.3 and 48.3A were made by account pay check or bank draft or ESS or any other in electronic mode that has been prescribed. Where the reporting has been done on the basis of the certificate of the assessee, the fact has to be reported as an observation in para 3 of form 3C and para 5 of form 3CB, as the case may be. The tax auditor in his report may comment on such violation as under. It is not possible for me or us to verify whether the payments in excess of 10,000 has been made otherwise than by an account pay check, bank draft, or electronic mode, as the necessary evidence is not in possession of the assessee. Then provision for payment of gratuity not allowable under section 47. So as per section 47, no deduction shall be allowed in respect of any provision made by the assessee for the payment of gratuity to his employees on their retirement or on termination of their employment or for any reason. Reduction, however, shall be allowed in relation to any provision made by the assessee for the purpose of payment of a sum by way of contribution towards an approved gratuity fund or for the purpose of payment of gratuity that has become payable during the previous year. The tax auditor should call for the order of the principal commissioner or commissioner granting approval to the gratuity fund, verify the date from which it is effective, and also verify whether the provision has been made as provided in the deed. Any sum paid by the assessee as an employer not allowable under section 40A9. So section 40A9 provides that any payment made by an employer towards the setting up of formation or contribution to any fund, trust, company, AOP, body of individuals, society registered under Society Registration Act or other institutions is not allowable. Tax auditor shall maintain detailed working papers documenting the factual nature of such expenses incurred and debited to the P&L for the previous year under consideration which are considered disallowable under 40 and 9. Tax auditor should get the relevant content. Tax auditor should get the relevant content in working papers prepared for such disallowance duly confirmed by the assessee as a necessary safeguard. If any such contribution is made by the assessee in a capacity other than that of an employer, then such contribution is not to be considered as disallowable under 40 and 9. Thus, the tax auditor should carefully examine the capacity of the assessee while making such contribution before reaching any conclusions. It may be noted that 49 allows deduction of any contributions made by an employer towards RPF or APF or notified pension scheme or approved gratuity fund or as required by any other law. Thus, any contribution made to employees' welfare cooperative society will not be allowed as a deduction in the case of employer company under 49 unless such contribution is required by or under any other law for the time being in force. Then G part, you have to report particulars of any liability of a contingent nature. So just a second. The assessee is required to furnish particulars of any liability of a contingent nature debited to the P&L. The tax order for verifying the details of contingent liability debited to the P&L may contain a detailed scrutiny of various account heads, that is, outstanding liabilities, provisions if required. Accounting policy followed would be helpful if you disclose about the same. The tax auditor may also verify reporting under CARO and disclosure in the notes on accounts. Then ICDS 10 para 9 provides that contingent liability shall not be deductible. Tax auditor should note that the contingent liability shown in the notes to accounts is not required to be reported as the amount debited to P&L to be reported in this subclause. Then next is regarding deduction inadmissible in 14A. The expenditure which is relatable to the income which does not form part of total income is not allowed as a deduction in terms of section 14A of the Act. Rule 8D lays down the method for determining the amount of expenditure in relation to income not includable in total income. The tax auditor has to verify the amount of inadmissible expenditure as estimated by the assessee with reference to established principles of allocation of expenditure based on logical parameters like proportion of exempt and taxable income recorded, turnover, man hours spent to earn the relevant income. For allocation of interest between taxable and non-taxable income, the quantum of investment, the period, and the rate of interest are generally the relevant factors which are to be considered. It is primarily the responsibility of the assessee to furnish the details of amounts of deduction inadmissible in terms of section 14A. The tax auditor has to examine the details of amount of inadmissible expenditure as furnished by the assessee. While carrying out such examination, the tax auditor is entitled to rely on the management representation. Then next is amount inadmissible under the proviso to section 3613. 3613 deals with deduction of interest. The provisions of 3613 provide that the amount of interest paid in respect of capital borrowed for the purpose of business or profession would be allowed as a deduction in computing the income referred to in 28. The proviso thereunder provides that any amount of interest paid for any period beginning from the date on which capital was borrowed for acquisition of the asset till the date on which such asset was put to use shall not be allowed as a deduction. The tax auditor, while determining the admissible or inadmissible amount under 3613, should also keep in mind the requirements of ICDS 10 relating to borrowing cost. Amount of interest inadmissible under Section 23 of the Micro, Small and Medium Enterprises Development Act 2006 or any other amount not allowable under 43BH. The tax auditor is required to state the amount of interest inadmissible under Section 23 of the MSMED Act. MSMED is an act to provide for facilitating the promotion and development and enhancing the competitiveness of MSMEs. So, meaning of micro small enterprise that you can go through. Then, what is the reporting requirement? The inadmissible interest has to be determined on the basis of the provisions of the MSMED Act. Section 16 of the MSMED Act provides for the date for which and the rate at which the interest is payable. Accordingly, where a buyer fails to make payment of the amount to the supplier, being micro and small enterprise as required under 15, the buyer shall, notwithstanding anything contained in any agreement between the buyer and the supplier, be liable to pay compound interest with monthly rest to the supplier on that amount from the appointed date, or as the case may be, from the date immediately following the date agreed upon at three times of the bank rate notified by the RBI. Section 24 of such act provides that sections 15 to 23 shall have effect notwithstanding anything inconsistent therewith contained in any other law for the time being in force. Okay? Then the tax auditor, while reporting in this clause, should seek information regarding status of the enterprise, cross-check the disclosure made in the financial statement, obtain a full list of the suppliers of the assessee, review the list so obtained, verify from the books of accounts whether any interest payable or paid to the buyer has been debited or provided for in the books. Verify the interest payable or paid is mentioned on a test check basis. Verify any additional information. If on a test check basis the tax auditor is satisfied, then the amount so debited to the P&L should be reported under 22. In order to promote timely payments to MSMEs, the Finance Act 2023 included payments made to such enterprises within the ambit of 43B. Accordingly, Clause H in Section 43B has been inserted with effect from AY 24-25. Okay. So next is 48(2)B, Clause 23. Particulars of payment made to persons specified under 48(2)B. This we all know, generally relatives of the business concerned, relatives of the assessee, they fall here. So the section enjoins on the assessing officer the power to fix the quantum of disallowance. Under this clause, the particulars of payment stated to be made to persons covered under 48(2)B should be examined. What is the tax auditor required to examine here? It is required to obtain a full list of specified person as contemplated in this section, obtain details of payments made to the specified persons, scrutinize all items of payments to the above persons, call for all the contracts or agreements entered into by the assessee, and list out the contracts and agreements entered into with the specified persons and segregate the items of payment made to them under these agreements. Where the transactions are voluminous or the list contains several names, then scrutiny to be made to the extent possible. In this case, reliance may be made on the information supplied by the client with adequate disclosure in the report. Okay, so we'll take a 25-minute break right now and we'll continue from clause number 24. सर ब्रेक लेंगे. Okay, so next clause is clause 24, which deals with amount deemed to be profits and gains under section 33AB or 33ABA. So 33AB allowed deduction in respect of tea development account, coffee development account, and rubber development account. The auditor is required to report the deemed income chargeable as profits and gains of business under the circumstances specified in sections 33AB 4, 5, 7, or 8. 33ABA allowed deduction in respect of site restoration fund. The auditor is required to report the deemed income chargeable as profits and gains of business under the circumstances specified in section 33 ABA 5, 7, or 8. Tax auditor has to verify the details regarding the deposit account and site restoration account. He also has to verify the accuracy of details given by the assessee by scrutinizing the books of accounts and other relevant documents and evidence. He also has to verify whether the assets acquired through deposit account is not sold or transferred before expiry of 8 years from the date of acquisition. Verify the manner of utilization of amount withdrawn from the specified reserve account. Clause 25. Any amount of profit chargeable to tax under section 41 and computation thereof. The tax auditor should obtain a list containing all the amounts chargeable under section 41 with the accompanying evidence, correspondence, etc. He should examine the past records to satisfy himself about the correctness of the information provided by the assessee. The tax auditor has to state the profit chargeable to tax under this section. This information has to be given irrespective of the fact whether the relevant amount has been credited to P&L account or not. The computation of the profit chargeable under this clause is also to be stated. The tax auditor should check whether amounts which have been written back in respect of trading liability by way of remission or cessation thereof is credited to the P&L. If any liability credit to P&L is already offered to tax in any prior period, the same shall not once again be considered as income in the year in which it is so credited. In case the amount given in this clause regarding 41 is not routed through P&L or income and expenditure account, the auditor may include the said fact in the observation para of the audit report. Then, in respect of any sum referred to in clauses A to G of section 43B, the liability for which. So A to G जो 43B के various sections है उनके regarding यहाँ पे reporting होती है clause 26 में, and it requires reporting in terms of any liability which pre-existed on the first day of the previous year but was not allowed in the assessment of any preceding previous year and was paid during the previous year or not paid during the previous year. Point B, was incurred during the previous year and was paid on or before the due date for furnishing the return under 139(1), not paid on or before the aforesaid date, state whether sales tax, custom duties, excise duty, or any other indirect tax, levy, cess, import, etc. is passed through the P&L account. So, what are the reporting requirements over here? As per section 43B, deduction in respect of certain expenditure is allowable on the basis of actual payment made within the time limit specified under 43B. ये सबको पता है. 43B specially deals with, just a second. 43B specially deals with that certain expenses will be allowed only on actual payment basis, right? So 43B is applicable in respect of expenditure for which a deduction is otherwise allowable under the Act. Therefore, where any expenditure is reported under any other clause indicating that deduction is otherwise not allowable, there is no need of reporting such expenditure under this clause. If the assessee is maintaining its books on the mercantile system, the tax auditor should verify the aforesaid particulars of 43B from the books of account for the year under audit as well as from the books of account, vouchers, and documents of the immediately succeeding assessment year and the return of income for the earlier assessment year so that the information about the aforesaid payments can be furnished. The tax auditor should clearly distinguish the liability incurred during the year in respect of all the specified sums for the liability that pre-existed on the first day of the relevant previous year. Then clause 27, part A, amount of central value added tax credits availed of or utilized during the previous year and its treatment in the P&L and treatment of outstanding central VAT credits in the books. So the amount of CENVAT or GST availed or utilized should be reported under this clause. In some cases, CENVAT or GST availed may be lesser than the CENVAT GST credit utilized during the year on account of opening balance in CENVAT or GST account or vice versa, as it would be advisable in order to avoid any misleading conclusion and inferences to report the opening and closing balances of CENVAT or GST. Regarding the reporting of accounting treatment of CENVAT GST credit, the clause requires that its treatment in the P&L and the treatment of outstanding CENVAT or GST credit in the account have to be reported thereupon. The tax auditor should verify and maintain the information in his working papers for the purpose of reporting in the format given in the e-filing utility. Point B. Particulars of income or expenditure of prior period credited or debited to the P&L. तो जो भी prior period expenditure है या prior period income है which is related to an earlier year, generally prior period का मतलब क्या होता है, जो पुराने period से pertain करता है उसके बारे में यहाँ पे reporting है. It may be noted that information under this clause would be relevant only in those cases where the assessee follows mercantile system of accounting. The tax auditor should obtain the particulars of expenditure or income of any earlier year debited or credited to the P&L of the relevant previous year when mercantile system of accounting is followed. It may be noted that there is a difference between expenditure of any earlier year debited to the P&L and the expenditure related to any earlier year which has been crystallized during the relevant year. Material adjustments necessitated by circumstances which, though related to previous periods but determined in the current period, will not be considered as prior period items. In such cases, though the expenditure may relate to the earlier year, it can be considered as arising during the year on the basis that the liability materialized during the year, and such cases will not be reported under this clause. Similar consideration will apply to income as well. Now 29A basically deals with 56.2. So whether any amount is to be included in the income chargeable under the head other sources as referred to in clause 9 of subsection 2 of section 56, yes or no? And if the answer is yes, please furnish the following details, which is nature of income and amount thereof. So this clause requires disclosure of whether any amount chargeable to tax under 56.9, and if so, to furnish particular prescribed details of income. 56.9 provides for taxability as income from other sources of any sum of money received in advance or otherwise in the course of negotiations for transfer of a capital asset, if such sum is forfeited and the negotiation do not result in transfer of such capital asset. The auditor is not required to report any such forfeited amount if it is in respect of a personal capital asset, where such asset or the advance or the forfeiture is not recorded into the books of account. If an advance has been received and has been outstanding for a considerable period of time, there is no requirement to report such amount unless it is forfeited by an act of the assessee. Forfeiture of amounts received as advance towards transfer of a capital asset is required to be reported under this clause. Any advances received and forfeited towards sale of stock in trade would be taxable under 28(1) and would not be required to be reported since the amount would be credited to P&L. The tax auditor should obtain a representation from the assessee regarding all such advances received towards the transfer of capital assets which have been forfeited during the year. He should also examine whether any amount of such advances has been written back during the year and examine the basis of such write back was on account of any such act of forfeiture. Then 29B, whether any amount is to be included as income chargeable under head other sources as referred to in clause 10 of subsection 2 of 56, yes or no, then again furnished nature of income and amount thereof. So this clause requires reporting as to whether any amount is to be included as income chargeable under the head other sources as referred in 56.2.10. Section 56.2.10 provides that where any person receives in any previous year from any person or persons money, immovable property, or other property and conditions stated in the clause are satisfied, then it is treated as income of the recipient. Receipt of assets other than immovable property or assets included within the purview of property under said section would not be covered by the provisions of this section and would therefore not be required to be reported. For example, stock in trade not being a capital asset is not covered by this provision. So the tax auditor should obtain a representation from the assessee regarding any such receipts during the year, either in his business or profession, recorded in the books of accounts. He should also scrutinize the books. He should also scrutinize the books of account to verify whether receipt of any such amount or asset has been recorded therein. Based on such verification, tax auditor has to consider whether the question is to be answered in affirmative or otherwise. In case answer to clause 29B is yes, then tax auditor has to furnish the following details, namely nature of income and amount. In case of nature of income, tax auditor should state whether the income is by way of receipt of any sum of money or by way of acquisition of any immovable property or other property such as shares, jewelry, drawings, paintings, etc. Then clause 30, details of any amount borrowed on Hundi or any amount due thereon. Details of the amount borrowed on Hundi including interest and details of repayment otherwise than by an account payback are to be indicated under this clause. The tax auditor should obtain a complete list of borrowings and repayments of Hundi loans otherwise than by account paid checks and verify the same with the books of accounts. The tax auditor should obtain from the assessee particulars of any amount borrowed on Hundi or any amount due thereon, including interest on the amount borrowed or repaid otherwise than by an account paid check. Just a second. So, in case of Hundi, the tax auditor should obtain a complete list of borrowings and repayments of Hundi loans other than otherwise than by banking channels. The tax auditor should obtain from the assessee particulars of any amount borrowed on Hundi or any amount due thereon, including interest on the amount borrowed or repaid, otherwise than by an account paid check. The tax auditor should check whether any such repayment payment has been made otherwise than by an account paid check. If yes, he should list out the amount involved on a transaction on transaction basis, indicating the date of payment and the modes of payment. Then moving forward to clause 30A regarding transfer pricing. So whether primary adjustment to transfer price as referred to in subsection 1 of 92C has been made during the previous year, yes or no. So this clause is requiring reporting of primary adjustments and various other details for the purpose of making secondary adjustments under section 92 CE. The tax auditor should obtain a certificate from the SESI as to what transfer pricing adjustments has been made during the previous year, so that the primary owner should be with the management, and then the same should also be verified from the tax records to check whether there is any such occurrence. So if the answer is yes, please furnish the following details. Under which clause of subsection 1 primary adjustment is made? Amount in INR of primary adjustment. Whether the excess money available with the AE is to be repatriated to India as per provisions of subsection 2 of 92 CA. If yes, whether the excess money has been repatriated within the prescribed time. If no, the amount in INR of imputed interest income on such excess money which has not been repatriated within the prescribed time. So basically, deals with primary adjustment and secondary adjustment of transfer pricing. So clause 30 requires reporting of whether primary adjustment to transfer price as referred to in 92 CE1 has been made during the previous year. Thus, the tax auditor is required to verify whether any primary adjustment is made in terms of 92 CE1 during the previous year. Under consideration, the primary adjustment made may not necessarily relate to previous year under consideration. It is also necessary that the disclosure under 30A may need to be done in respect of each and every type of primary adjustment made in the relevant financial year, irrespective of the previous year to which this adjustment pertains to. So, for instance, an assessment order in relation to FY 21-22 may be passed during FY 23-24 wherein AO has made a primary adjustment and the same has been accepted by the taxpayer. Such primary adjustment may need to be reported in the tax audit report of financial year 23-24. The tax auditor then needs to report the relevant clause of 92 CE1 under which the relevant adjustment falls and the amount of adjustment. Under clause 30A(b)(3), the requirement is to report whether the excess money available with the AE is required to be repatriated to India as per the provisions of section 92 CE2. In case any such primary adjustment has taken place, which requires repatriation of the excess money or part thereof, the tax auditor should verify whether the excess money has been received and whether it has been received within the prescribed time. He should report accordingly. In case the excess money or part thereof has not been repatriated within the prescribed time, the imputed interest income, which would be the secondary adjustment, needs to be computed. Since the reporting is for the previous year, it is advisable for the tax auditor to ensure that the amount of interest imputed till the end of the previous year is furnished. In case the interest up to the date of filing of the tax audit report is given, it is advisable for the tax auditor to provide a breakup of the amount of interest imputed till the end of the relevant previous year and for the period post the end of the relevant previous year, ending with the date of filing tax audit report. It is possible that interest income may be imputed during the relevant previous year in connection with the primary adjustment made during the earlier previous year. Such interest income arising from primary adjustment in earlier year is also taxable during the previous year under consideration and will be included in the return of income. Thus, it may be advisable for the taxpayer to furnish and verify and report the information pertaining to such primary adjustments in respect of interest income which is chargeable under 92 CE2. The tax auditor should obtain a certificate from the SESI as to what transfer pricing adjustments have been made in the return of income filed during the previous year, whether any advanced pricing arrangement, that is APA, was entered during the previous year, whether any transfer pricing adjustment was made confirmed, or whether any agreement has been arrived at under MAP during the previous year. The tax auditor should also verify tax records to check whether there is any such occurrence. In this regard, the auditor should obtain a prior management representation on the information obtained to be true and accurate, basis which he should make the disclosure in the tax audit report. Hence, the primary onus is on the management. Then 30B. 30B deals with whether the assessee has incurred expenditure during the previous year by way of interest or of similar nature exceeding 1 crore rupees as referred to in subsection 1 of section 94B. So, what are the reporting requirements over here? This clause requires reporting for the purpose of examining allowability of expenditure by way of interest in respect of debt issued by a non-resident AEs under 94B while computing income under the head PGBP. The excess interest is to be calculated as the lower of total interest paid or payable in excess of 30% of earning before interest, tax, depreciation, and amortization, that is EBITDA, of the borrower in the previous year or interest paid or payable to the associated enterprises for that previous year. Now, if yes, please furnish the following details. So, if such interest exceeds 1 crore, then following details are to be furnished. What are the details? Amount in INR of expenditure by way of interest or of similar nature incurred. EBITDA. Amount in INR of expenditure by way of interest or of similar nature as per one above which exceeds 30% of the EBITDA. Details of interest expenditure brought forward as per 94B4. Details of interest expenditure carried forward as per 94B4. So the excess interest which is disallowed is allowed to be carried forward for a period of 8 assessment years following the year of allowance. This allowance to be allowed as a reduction as against PGBP in subsequent years to the extent of maximum allowable interest expenditure under this section. In computing the limit of rupees 1 crore, only interest and expenditure of similar nature which is deductible should be considered and not interest deductible under any other head of income. Therefore, any interest disallowable under 14A, 3613, 40AI, or 40A2 should not be considered as interest for the purpose of section 92B1. Similarly, interest disallowed on account of transfer pricing under 92 should also not be considered since such interest is not allowable in computing the income under PGBP. In such case, such interest exceeds rupees 1 crore, details in part B of the clause need to be given. Okay, so we move forward. 30C. It is regarding the GAAR provisions. So whether the assessee has entered into an impermissible avoidance agreement, which is also known as IAA, as referred to in section 96 during the previous year, yes or no? If yes, please specify nature of the IAA, amount in INR of tax benefit in the previous year arising in aggregate to all the parties in the arrangement. This clause requires the tax auditor to report impermissible avoidance arrangements as referred to in section 96 entered into by the assessee during the previous year and to quantify the tax benefit arising in the aggregate in the previous year to all parties to such arrangement. The auditor should examine if in any earlier year whether any reference has been made for declaring an arrangement as an IAA. If such reference has been made, the auditor should report the fact in 3CA or 3CB. In light of Chapter 10A, provisions of Income Tax Act relating to GAAR, the rules made thereunder and CBDT circular thereto, the auditor should examine the following. The tax auditor should examine whether the principal commissioner or commissioner or approving panel has in any earlier previous year declared any arrangement as an IAA. In case if any arrangement has been declared to be an IAA in any earlier previous year, the tax auditor should further examine if any transaction pertaining or in connection with a declared IAA has taken place during the previous year under the audit. The tax auditor should examine if in any earlier previous year whether any reference has been made for declaring an arrangement as an IAA. If such references has been made, the auditor should report the fact in 3CA or 3CB. In both the cases, the auditor should further examine if any transaction pertaining with such declared IAA or such arrangement has taken place during the previous year under the audit. If any transaction has been taken place, the tax auditor should report this fact along with the tax benefit arising to all the parties. If, however, he is unable to ascertain the tax benefit in the previous year arising in aggregate to all the parties to the arrangement, he should indicate the same in Form 3CA or 3CB as the case may be. In either case where the assessee has given response to any show cause notice or has preferred an appeal along with the outcome thereof should be taken into consideration while reporting. Then 31, Clause 31, Subclause A. Particulars of each loan or deposit in an amount exceeding the limit specified in 269 SS taken or accepted during the previous year. The 269 SST ये आप aware हैं, loan otherwise than by allowed or permitted modes, which is account pay check or account pay bank draft. तो उसके regarding reporting है. So what you have to report is name, address and PAN or Aadhaar if available, amount of loan or deposit taken or accepted, whether the loan or deposit was squared up during the year, maximum amount outstanding at any time during the previous year, whether the loan or deposit was taken or accepted by check or bank draft or ECS. In case the loan or deposit was taken or accepted by check or bank draft, whether the same was taken or accepted by an account pay check or account pay bank draft. This clause seeks certain particulars of each loan or deposit in an amount exceeding the limit specified in 269 SS. Particulars of each loan or deposit falling within the scope of this section taken or accepted during the previous year are to be stated under this clause. Reporting is required only where each loan or deposit in an amount of rupees 20,000 or more severally or an aggregate of the three sums as specified in the section. This subclause requires 6 specific particulars in respect of each loan or deposit, including the PAN or Aadhaar of the lender or depositor, if available. The tax auditor should obtain the details from the assessee in respect of each reportable loan or deposit and verify the same from the records and evidence available with the assessee. There will be practical difficulties while verifying the loan or deposit taken or accepted by the account pay check or an account pay bank draft. In such cases, the tax auditor should verify the transaction with reference to such evidence which may be available. In the absence of satisfactory evidence for answering as to whether bank check or bank draft was account pay, the tax auditor should make a suggested comment in the report. So B also relate to 269 SS, and what is the reporting here is, so under this clause, particulars of any specified sum taken or accepted in relation to transfer of an immovable property, whether or not the transfer takes place, has been dealt with, and such specified sum may be sum receivable. So the tax auditor should ascertain whether the assessee has any immovable property which has been transferred or was proposed to be transferred during the year and review the relevant agreements documents in this regard. The auditor should satisfy himself that the proceeds arising from such transfer, based on the review of documents, has been duly credited to the bank account by an account pay check or account pay bank draft or use of ECS or through such electronic mode as may be prescribed. Then 269 ST. So 269 ST भी similar clause ही है. वहाँ पे 269 SS deals with acceptance. 269 ST deals with cash payments during a single day. So particulars of each receipt in an amount exceeding the limit specified in section 269 ST in aggregate from a person in a day or in respect of a single transaction or in respect of transactions relating to one event or occasion from a person during the previous year where such receipt is otherwise done by account pay check or draft or use of ECS through a bank account. So what is to be reported is name, address, PAN or Aadhaar number, nature of transaction, amount of receipt in INR and date of receipt. ठीक है, and BC says particulars of each payment made in an amount exceeding the limit specified in section 269 ST in aggregate to a person in a day or in respect of a single transaction or in respect of transactions relating to one event or occasions to a person otherwise than by a check or bank draft or use of ECS through a bank account during the previous year. And what are the details required to be given? Name, address, and PAN or Aadhaar number if available with the assessee of the payee, the nature of the transaction, amount of payment in INR, and date of payment. And clause BD में भी similar आपको particulars of each payment देनी है in respect of the payee, उसमें name, address, PAN, amount of payment, ठीक है. And then it specifies that particulars at BA, BB, BC and BD need not be given in the case of receipt by or payment to a government company, banking company, post office, saving banks, a cooperative bank, or in the case of transactions referred to in 269 SS, or in the case of persons referred to in notification. So in cases में requirement नहीं है देने की. Now what are the requirements? How you have to provide such information वो एक बार देख लेते हैं. So the subclauses BA, BB, BC and BD of clause 31 deal with reporting of transactions of receipts and payments in excess of the specified limit made otherwise than by mode specified in 269 ST. 269 ST does not distinguish between receipt on capital account and revenue account. Accordingly, subclauses BA, BB, BC and BD do not distinguish between receipts and payments on capital account and revenue account. Once the receipt is, just a second. Okay. So subclauses B and B of clause 31 requires particulars to be furnished in respect of transactions exceeding 2 lakh where assessee has received the amount from a person, whereas subclauses BC and BD of 31 requires information about the transactions exceeding 2 lakhs where the payment has been made by the assessee to a person. While it is comparatively simple to work out receipts or payments to or from a single person in a day, the tax auditor will have to exercise due care and caution. So, काफी care and caution के साथ करना है. While arriving at the particulars of receipts or payments pertaining to a single transaction or relating to a single event or occasion. The tax auditor will need to link all receipts and payments, as the case may be, otherwise than by mode specified in this section, received or made in respect of single transaction, and verify if the aggregate amount exceeds the limit specified in section 269 ST. A single invoice may relate to multiple transactions and vice versa. Multiple bills may relate to a single transaction. The tax auditor will have to exercise his judgment to decide whether the receipt is pertaining to a single transaction. तो उसको अपना judgment exercise करना है, उसको case to case basis पे चीज़ determine करनी है. And let's see an example. So for example, for a function organized by a person, assessee contractor may have been given catering contract as well as contract for flower decoration. In such a case, while the transactions may be different, the occasion or event would be the same and provisions of 269 ST will be attracted if the receipts exceeding the limit specified under 269 ST are by mode other than those specified in the section. It is possible that the assessee may have purchased goods or services while simultaneously he may have sold goods or services to the same party, consideration for which exceeds 2 lakh. In such a case, if the amount of consideration for purchase is set off against the amount receivable for the sale, such set off is not a receipt. If the amount of such set off exceeds 2 lakh, the tax auditor may give appropriate note to the effect that such set off not being a receipt or payment has not been included in the particular given and the relevant subclause. If such receipts or payments are otherwise than by account pay, check or other banking channels, then the tax auditor will have to verify the mode of the receipt or the payment as the case may be. उसको verify करनी है and then उसको classify करनी है as under otherwise than by check or bank draft or use of ECS through a bank account into receipt or payment, and then by check or bank draft not being an account pay check or an account pay bank draft. While Section 269 ST deals with receipts exceeding 2 lakh or more otherwise than by the specified modes, Subclauses BA, BB, BC, and BD of 31 require details to be furnished of both receipts and payments. The particulars required under these clauses need not be given in case of a receipt by और a payment. तो ये पहले वाला ही जो एक्सक्लूजन बाकी केसेस में भी था यहाँ पे भी है कि अगर बैंकिंग कंपनी है या पोस्ट ऑफिस सेविंग बैंक्स है या ये है तो पर्टिकुलर्स नीड नॉट बी गिवन. देन सिमिलरली 269T है. 269 आपको समझना है क्या है. इट इज रीपेमेंट ऑफ अ लोन और डिपॉजिट इन एन अमाउंट एक्सीडिंग द स्पेसिफाइड लिमिट. सो जैसा 269SS है वैसा ही 269T है. नेम, एड्रेस, पैन और आधार नंबर ऑफ द पे देना है. अमाउंट ऑफ रीपेमेंट, maximum amount outstanding at any time during the previous year, whether the repayment was made by check or bank draft or use of ECS through a bank account. In case repayment was made by check or bank draft, whether the same was repaid by an account pay check or bank draft. ठीक है. So 269T कब अट्रैक्ट होता है जब आप रीपेमेंट ऑफ लोन और डिपॉजिट करते हो on a single date in cash, which is otherwise done by account pay checks of an amount of rupees 20,000 or more. In the case of a company SSC, loan or deposit is defined to mean deposit repayable after notice or loan or deposit repayable after a period. Therefore, in case of a company, loan or deposit repayable on demand will not be considered for the purpose of this section as loan or deposit. However, in the case of non-company SSCs, loan or deposit is defined to mean loan or deposit of any nature. This distinction will have to be kept in mind while giving information under this subclause. So, loan or deposit discharged by means of transfer entries in the books of account constitute repayment of loan or deposits otherwise done by account pay check or account pay bank draft. Hence, such entries have to be reported under this clause. The tax auditor has to take in account the technological advancements in the field of banking and information technology, where loans have been repaid otherwise than by banking channels. These types of payments, though not made by account pay checks in the conventional manner, are capable of being tracked, and in order to judicially apply these provisions, the tax auditor need not report such cases under this clause. The use of ECS through a bank account is a permissible mode for the purpose of 269T. The entries that relate to transactions with the supplier and customer on account of purchase will not be treated as loans or deposits repaid. Just a second. The monetary limit of rupees 20,000 or more is applicable in respect of a banking company or a corporate bank with reference to each branch and in all other cases SSC as a whole. Okay, so 269 SST, this we have discussed. Now let's go to clause 32, which is details of brought forward loss or depreciation allowance to the extent available, containing information relating to assessment year, nature of loss or allowance in INR, all losses allowance not allowed under section 115BAA, 115BAC, 115BAD, BAE, amount as assessed, give reference to the relevant order and remarks. If the assessed depreciation is less and no appeal pending, then take the assessed amount. So यहाँ पे basically brought forward depreciation allowance या losses की details देनी है. So the amount of brought forward loss or depreciation allowance is required to be quantified as per the return and the assessment orders or appellate orders, if any. Depreciation on goodwill will not be available from AY 21-22. Brought forward losses may relate to different heads of income such as property income, profits and gains of business or profession, speculation business or capital gains. Different provisions are contained in section 32 and 70 to 79A with regard to loss or depreciation under different heads. In the remarks column, information about the pending assessment or appellate proceedings or about delay in filing loss returns should be given. For giving the above information, the auditors should study the assessment records, that is, income tax returns filed, assessment orders, appellate orders, orders giving effect to appellate order, and rectification revisional orders for the earlier years, and ascertain if the figures given in the above clause are correct. The tax auditor should keep in mind the provisions of Section 71B regarding carry forward and set off of loss from house property, Section 73A regarding carry forward and set off of losses by specified business, and also Section 78 regarding carry forward and set off of losses in case of change of constitution of firm or on succession. The tax auditor should obtain all the assessment orders or appellate orders completed and pending during the audit. If the consequential order for any revision or appellate order is yet to be passed, the same can be disclosed along with the impact thereof if material. It means that in any case of undisclosed income determined in the case of an assessee during any proceedings of search, requisition, or survey, then no adjustment or set off shall be allowed against such undisclosed income. The set off shall not be available in case of both brought forward losses as well as unabsorbed depreciation. From AY 22-23 onwards, the tax auditor has to confirm and verify whether any search or survey has taken place or undergoing based on the records of assessment of the assessee, and accordingly shall check if any undisclosed income has been determined in case of the assessee. The eligibility of brought forward losses and unabsorbed depreciation. Again, such undisclosed income, as computed by the assessee, should be checked, and based on that, the necessary adjustment should be made to losses to be carried forward by the assessee. Next point B is regarding change in shareholding pertaining to Section 79. Whether a change in the shareholding of the company has taken place during the previous year, due to which the losses incurred prior to the previous year cannot be carried forward under Section 79. तो इसको वेरीफाई करना है कि कोई चेंज इन शेयर होल्डिंग हुई है जिसकी वजह से पुराने जो लॉसेस है वो कैरी फॉरवर्ड नहीं हो सकते अंडर 79. The tax auditor should obtain the details of changes in voting power pattern year on year and verify the reasons for any such changes before determining the liability of losses eligible to be carried forward. The tax auditor should obtain necessary representation to this effect whether it is not feasible to verify or cross check the shareholding pattern and changes therein. The comparison of the composition of the shareholding is to be done with reference to the last day of the current previous year and the last day of every previous year in which the loss was incurred. The carry forward of the loss incurred in respect of different previous years is to be determined with respect to the individual previous years. Such comparison of the shareholding can be done by referring to the register of members. Next is regarding Section 73, subclause C. Whether the assessee has incurred any speculation loss referred to in Section 73 during the previous year. If yes, please furnish details of the same. So this is the question. So what all are the reporting requirements that the tax auditor has to see? So having regard to the definition of speculative business, the tax auditor has to verify from the books and other relevant documents as to whether the assessee is carrying on any speculation business. On verification, if the auditor is of the opinion that the auditee is carrying on speculation business under this clause, the tax auditor has to furnish the details regarding speculation loss referred to in Section 73, if any incurred by the assessee during the previous year. It may be noted that it is not necessary that same speculation business needs to be continued to set off the loss of earlier years against profit of same speculation business. It can be any speculation business or a different speculation business. Next subclause D relates to whether the assessee has incurred any loss referred to in Section 73A in respect of any specified business during the previous year. If yes, please furnish details of the same. So what are the things that the auditor has to check over here? So under clause 32D, the tax auditor has to verify from the books of accounts and other relevant documents as to whether the assessee is carrying on specified business as referred to under Section 35 AD. In case the auditor is of the opinion that the assessee is carrying on such specified business, he has to furnish the details of the loss incurred, if any, in respect of any specified business during the previous year. In case the assessee carries on more than one specified businesses and loss has been incurred in both the businesses, the details of the loss incurred with respect to each business to be specified separately. So, in case of a company, subclause E, please state that whether the company is deemed to be carrying on a speculation business as referred in explanation to Section 73. If yes, provide details of speculation loss, if any, incurred during the previous year. So, explanation to Section 73 provides that where part of the business of the company other than a company whose GTI consists mainly of income which is chargeable under the heads income from securities, income from house property, capital gain, and income from other sources, the principal business of which is the business of trading in shares or banking or granting of loans and advances consisted in the purchase or sale of shares of other companies, shall be deemed to be carrying on a speculation business to the extent to which business consists of purchase and sale of such shares. The tax auditor has to furnish the details regarding the speculation losses incurred, if any, as referred to in explanation to Section 73. Then, Clause 33 deals with section-wise details of deductions, if any, admissible under Chapter 6 or Chapter 3, that is Section 10AA, specifying the section under which deduction is claimed and the amounts admissible as per the provisions of the Income Tax Act and fulfills the condition, if any, specified under the relevant provisions of the Income Tax Act or rules or any other guideline, circular, etc. issued in the behalf. So the tax auditor has to ensure that the assessee fulfills all the conditions specified in the sections under which deduction is claimed. For ascertaining this, the tax auditor has to obtain all necessary evidence which would enable him to express the opinion regarding the admissibility of deductions. In order to ascertain the fulfillment of this condition, the tax auditor may have to check all documentary evidences. Just a second. So the tax auditor has to ensure that the assessee fulfills all the conditions specified in the section under which deduction is claimed. For ascertaining this, the tax auditor has to obtain all the necessary evidence which would enable him to express the opinion regarding the admissibility of deductions. In order to ascertain the fulfillment of this condition, the tax auditor may have to check all documentary evidences. There may be cases where there is difference between the amount claimed by the assessee and the amount computed by the tax auditor. In such cases, it is quite possible that the assessee's claim is based on some judicial pronouncement on the subject. In such cases, it may be advisable for the tax auditor to report the amount admissible. The amount claim and the background behind and the basis of the claim of the assessee may form part of the working papers. If the claim of the assessee is well founded and settled by the judicial pronouncement, the tax auditor may accept the claim, but he has to record in his working papers that admissible amount has been reported on the basis of such judicial pronouncements. In appropriate circumstances, such judicial pronouncements should be mentioned in the report. It may be noted that separate audit report or certificate is required to be obtained under 10AA and certain sections like ATIA, IB, IC, ATJJA. While giving information with regard to the deduction allowable under these sections, the tax auditor should refer to separate audit reports or certificates obtained by the assessee. These audit report certificates may have been given by the tax auditor or by any other auditor. The figures given in such separate audit report certificates should be taken into consideration while giving information with regard to income covered by these sections. Now, the next point 34A basically deals with TDS, TCS, and the required forms. So, it deals with whether the assessee is required to deduct or collect tax as per provisions of Chapter 17B or Chapter 17BB. If yes, please furnish the details: TAN number, section number, nature of payment, total amount of payment or receipt, total amount on which tax was required to be deducted or collected, total amount on which tax was deducted or collected at specified rate, amount of deducted tax or collected, total amount on which tax was deducted or collected at less than specified rate, or amount of tax deducted or collected at less than specified rate, and the amount of tax deducted or collected not deposited to the credit of the central government. Now this is very very important because TDS वाला चैप्टर बहुत ज़्यादा इंपॉर्टेंट होता है और उसमें नॉन कंप्लायंसेस होती हैं जनरली एसएससीज की. So, while answering the issue of applicability of the provisions of 17B and 17BB, a number of debatable issues may arise before the assessee as well as the tax auditor. The auditor may have a difference of opinion with regard to the applicability of the provisions of TDS or TCS on a particular payment. In such a case, the tax auditor has to report the difference of opinion appropriately as an observation in para 3 of 3CA or para 5 of 3CB. It is essential to note that it is the primary responsibility of the assessee to prepare the information in such a manner that the tax auditor can verify the compliance as required in the clause. The tax auditor is required to verify that no items have been omitted in the information furnished to him, and reasonable test checks would reveal whether or not the information furnished is correct. The extent of checks undertaking would have to be indicated by the tax auditor in his working papers and audit notes. It may be noted that while determining the amount to be reported in this clause, the tax auditor has to check and verify the payments made by the assessee and should not only restrict to verification of expenses debited to P&L or the TCS returns filed and provided by the assessee. So, for example, an advance payment made to any contractor may also be liable for deduction of tax. In the case of payment to non-residents, the applicable rate of tax deduction in stores is to be read along with the DTAA. This clause also requires the tax auditor to furnish the total amount out of the amount deductible or collectible at which the tax was deducted or collected at the rate less than the specified rate. The lesser deduction is required to be reported in this clause. This will include deduction at a lower rate than what is prescribed, application of wrong section for deduction of tax at source, etc. For instance, Section 194C requires deduction at the rate of 2% in case payment is made to a person other than individual or HUF, but the deductor deducts only 1%. The same has to be reported under this clause. The tax auditor should also consider applicability of higher rate of TDS or TCS under certain circumstances, like non-furnishing of PAN, non-filers of return. The tax auditor should verify the cases where the tax has been deducted at source but not paid to the credit of the central government till the date of the audit. It may be seen that tax deducted but deposited late will not be required to be reported. Tax auditor should obtain a copy of all the TDS and TCS returns filed by the assessee and reconcile the same with the books of accounts, which will form the basis of reporting under this clause. The tax auditor should take into consideration the relevant sections, rules, notifications, circulars, and various judicial pronouncements in relation to transactions of relevant payment or collections. If the tax auditor has not agreed with the interpretation or views taken by the assessee, he should report the same in 3CA or 3CB. Point B. Whether the assessee is required to furnish the statement of tax deducted or tax collected. If yes, please furnish details of TAN, type of form, due date for furnishing, date of furnishing. Then, if furnished, whether the statement of tax deducted or collected contains information about all transactions which are required to be reported. If not furnished, list of details or transactions which are not reported. तो यहाँ पे आपको क्या करना है, यहाँ पे he has to ascertain and report as to whether the assessee is required to furnish the statement of tax deducted or tax collected at source within the prescribed time and answer yes or no depending on his examination. If the answer is yes, the tax author shall provide further details in a table contained in 34B only with regard to the statement required to be furnished by the assessee. The information given in clause 34A and B should be reconciled with the disallowances reported under. So obviously, जब भी आप tax audit report भर रहे हो, तो reconciliation is very very important. You should reconcile with what earlier you have filled in and now whatever you are filling in. तो वो reconciliation बहुत important हो जाता है. Then tax auditor should also ascertain which statements the assessee was required to furnish for the financial year under audit. He should check which statements have been furnished by the assessee for tax deducted as well as collected. The reporting requirement is notwithstanding the fact that the assessee has furnished the statements of tax deducted at source and tax collected at source or not. The tax auditor should keep in mind the laws relating to tax deductions and collections at source and various case laws so as to detect any case of contravention or default in the provisions of chapter 17B or 17BB. If the information is voluminous, then the tax auditor should consider reporting significant deficiencies with appropriate remarks. Then subclause C, whether the assessee is liable to pay interest under section 201(1)(a) or section 206(c)(7. If yes, please furnish details of TAN, amount of interest under section 201(1)(a), 206(c)(7 is payable and the amount of interest paid along with date of payment. Under this clause, the tax auditor is required to furnish detailed information in case an assessee is liable to pay interest under section 201(1)(a) or 206(c)(7. Where the assessee is liable to pay such interest, the tax auditor should verify such amount from the books of account as on 31st March of the relevant previous year and also from Part G of the statement generated by the department in Form 26AS. In case the assessee had disputed the levy or calculation of interest under traces in Form 26AS or AIS or TIS of the assessee, the auditor may recalculate the amount of interest under these sections up to the date of audit report for reporting under this clause and also mention the fact in his observations paragraph provided in Form 3CA or 3CB as the case may be. Then next is 35. 35 basically deals with in quantitative details. So in the case of a trading concern, quantitative details of the following is required, which is opening stock, purchases during the previous year, sales during the previous year, closing stock, shortage or excess if any. So what are the reporting requirements? The tax auditor should examine firstly whether the enterprise is a trading concern or not. If yes, the tax auditor should obtain certificates from the assessee in respect of the principal item of goods traded, the balance of the opening stock, purchases, sales and closing stock, and the extent of shortage, excess, damage, and the reasons thereof. The entire quantitative information should be examined by the auditor from the record. Record से पूरी examine करनी है. Then we come on to a manufacturing concern. So in the case of a manufacturing concern, quantitative details of principal items of raw materials, finished products and byproducts. So raw materials में देना है opening stock, purchases, consumption, sale, closing stock, yield of finished products, percentage of yield, shortage or excess if any. Finished products or byproducts में देना है opening stock, purchases, quantity manufactured, sales during the previous year, closing stock, shortage, excess if any. Now, what are the reporting requirements? क्या क्या ध्यान रखना है tax auditor को? The tax auditor should ascertain whether the enterprise is a manufacturing concern and accordingly report it in clause 10A. If yes, this subclause is applicable. The tax auditor should obtain certificate from the assessee in respect of principal items of raw material, finished goods and byproducts, and quantitative information required to be reported. Note, this clause requires that quantitative details of principal items of raw materials and finished goods should be given. Therefore, information about petty items need not be given. What would constitute principal items will depend on the facts of each case. Normally, items which constitute more than 10% of the aggregate value of purchases, consumption, or turnover may be classified as principal items. Then, moving on to clause 36A, whether the assessee has received any amount in the nature of dividend as referred in 222E, जो हम रिलेटेड पार्टीज को अगर लोन देते हैं तो 222E ट्रिगर होता है, तो उसकी डिटेल्स यहाँ पे डालनी है. एंड इफ यस, वी हैव टू फर्निश द डिटेल्स ऑफ अमाउंट रिसीट एंड डेट ऑफ रिसीट. So what are the things that the tax auditor has to do over here? The tax auditor should obtain from the taxpayer a certificate containing a list of closely held companies in which he is the beneficial owner of shares carrying not less than 10% of the voting power, and list of concerns in which he has a substantial interest. The dividend taxable under section 222E is restricted to accumulated profits on the date of payment. Thus, the accumulated profits have to be determined as on the date of the payment. Further, if at any time earlier any amount has been considered as income under any of the clauses of section 222, the accumulated profits will have to be reduced by such an amount. The tax auditor may not be able to determine the accumulated profits, such as on the date of the payment of a closely held company, making the payment for various reasons. The tax auditor in such a case may arrive at the accumulated profits by appropriating the profit for the year on a time basis. In such a case, the auditor should include appropriate remarks in para 3 of 3CA or para 5 of 3CB. For tracking 222E, it is necessary that the assessee receiving a loan or advance should be a shareholder. Wherever the beneficial shareholder is not the registered shareholder and the closely held company has given loan or advance to the beneficial shareholder or to a concern, the tax auditor should make an appropriate remark in 3CA or 3CB as the case may be. The tax auditor should also obtain a certificate from the taxpayer giving particulars of any loan or advances received by any concern in which he has a substantial interest from any closely held company in which he is beneficial owner of shares carrying not less than 10% of the voting power. These certificates are necessary since the tax auditor may not be able to verify the above from the books of accounts of the assessee. The tax auditor should verify Form 26S in case of the taxpayer to know if the closely held company has deducted tax at source from any payment made to it under 194. Then we have clause 37, 38. Okay. (37) Whether any cost audit was carried out. If yes, give the details, if any, of disqualification or disagreement. तो टैक्स ऑडिटर को मैनेजमेंट से असरटेन करना है वेदर एनी सच कॉस्ट ऑडिट वाज कैरिड आउट. अगर हुई है तो उसको वो उसकी कॉपी वहां से ले लेनी है. देन क्लॉज 38 डील्स विद एनी ऑडिट कैरिड आउट अंडर द सेंट्रल एक्साइज एक्ट. इफ यस, गिव द डिटेल्स if any of disqualification or disagreement. So the tax auditor should ascertain from the management whether any audit was carried out under the central excise law, and if such audit was carried out, obtain a copy of the report. And डिटेल स्टडी नहीं करना उसको, पर जो भी डिटेल्स हैं और कोई डिस्क्वालिफिकेशन है या डिसएग्रीमेंट है तो वो उसको मेंशन करनी है. He should also examine the time period for which the excise audit has been required to be carried out. Information is required to be given only in respect of such excise audit report, the time period of which falls within the relevant previous year. Then clause 40 deals with details regarding turnover, gross profits, etc. for the current year, which is the previous year, and the preceding previous year. So total turnover of the assessee, gross profit by turnover, net profit by turnover, stock in trade by turnover, material consumed by finished goods produced. So ये ratios assessee को carry out करने हैं for manufacturing or trading activities. And while calculating these ratios, the tax auditor should assign a meaning to the terms used in the above ratios. All the ratios mentioned in this clause are to be calculated in terms of value only. Then clause 41 deals with details of demand raised or refund issued during the previous year under any tax laws other than the Income Tax Act and Wealth Tax Act, along with details of relevant proceedings. सो असेसी की असेसमेंट और भी दूसरे लॉज में होनी चाहिए. तो उन सब लॉज के असेस द टैक्स ऑडिटर शुड ऑब्टेन copy of all the demand refund orders issued by the government authorities during the previous year under any tax law other than the Income Tax Act. The auditor should exercise his professional judgment in determining the applicability to relevant tax laws for reporting under this clause. और इस केस में टैक्स ऑडिटर को बुक्स ऑफ अकाउंट भी वेरीफाई करनी चाहिए. जो भी रिस्पेक्टिव डिपार्टमेंट ने ऑर्डर्स पास किए वो वेरीफाई करने चाहिए. क्रॉस वेरीफाई भी करना चाहिए डिमांड फ्रॉम द ऑनलाइन पोर्टल्स. ठीक है. एंड रिपोर्टिंग करनी चाहिए. इन केस ऑफ कॉर्पोरेट असेसी, the auditor may check the said details with the disclosures of the contingent liabilities. Then clause 42, whether the assessee is required to furnish statement in form 61, 61A or 61B. If yes, तो income tax department reporting entity identification number, type of form, due date of furnishing, date of furnishing, ये सारी चीज़ें हमें रिपोर्ट करनी पड़ती है. सो रूल 114D1 के अकॉर्डिंग है ये सारी कंप्लायंसेस. तो टैक्स ऑडिटर को क्या क्या यहाँ पे वेरीफाई करना है. सो ही हैज टू वेरीफाई वेदर द असेसी इज लायबल टू रिपोर्ट द ट्रांजैक्शन इन द प्रिस्क्राइब फॉर्म और नॉट, एंड इफ यस वेदर द असेसी हैज फाइल्ड द सेम. The tax auditor is further required to state whether the form contains all the information. अगर कोई deficiencies है तो tax auditor वो भी बताएगा. And जो भी uploaded है forms, which is form 61, 61A and 61B income tax portal पे, वो examine करेगा tax auditor. Clause 43, clause 43 है, 44 है. Yeah, so clause 43 and 44, two last clauses. So 43 is whether the assessee or its parent entity or alternate reporting entity is liable to furnish the report as referred to in subsection 2 of section 286. तो इसमें ये सारी रिपोर्टिंग रिक्वायरमेंट्स है, सेक्शंस हैं पहले तो. फिर इसमें टैक्स ऑडिटर को क्या क्या वेरीफाई करना है. सो द टैक्स ऑडिटर शुड वेरीफाई इन द केस ऑफ द असेसी if any of the above four situations exist. The tax auditor should verify if the assessee whose parent is a non-resident has filed Form 3AC. Then the tax auditor may obtain necessary certificate from the assessee in respect of constitution of the international group. And then clause B बोलता है, if yes, please furnish the following details, which is whether report has been furnished by the assessee or its parent entity or an alternate reporting entity, name of parent entity, name of alternate reporting entity if applicable, date of furnishing of report. So if the assessee is liable to file Form 3C EAC, the tax auditor has to verify whether the necessary compliance has done. अगर एसएससी ने करी है कंप्लायंस तो उसको वेरीफाई करना है और टैक्स ऑडिटर को एक्नॉलेजमेंट. ठीक है. एंड टैक्स ऑडिटर कैन आस्क फॉर अ कॉपी ऑफ द रिपोर्ट एंड एक्नॉलेजमेंट. From acknowledgement for furnishing report, date for furnishing should be stated. The tax auditor may obtain necessary certificate from the assessee in respect of the constituent entity. Then last is 44. Clause 44 is breakup of total expenditure of entities registered or not under the GST. Okay? So this clause requires to provide details of the expenditure in respect of entities registered under GST, which is further subclassified into 4 categories. So expenditure relating to goods or services exempt from GST, expenditure related to entities falling under composition scheme, expenditure relating to other registered entities, then total payment to registered entities. So, under this clause, the expenditure relating to entities not registered under GST is also to be given. The value of inward supply of goods and or services received from unregistered persons should be reported here. It is important to differentiate the current status of supplier registration from their status as was at the time of the supply. Events occurring after the balance sheet date that alter the data relating to the year under audit does not alter the nature of the expenditure that is from the registered suppliers. Auditors may elect to extend their review up to a certain cutoff date or not at all. In either case, disclosure of notes of the position with regard to known cancellations and treatment in the disclosure considering possibility of such cancellations would go a long way in making the report meaningful and unambiguous. Under clause 44, the language uses expenditure in respect of, and if there is a case of multiple GST registrations, there is a likelihood of inter-branch supply which is eliminated at the consolidated financials. Proper reconciliation for such type of transactions may be kept on record. This report may be prepared for an entity as a whole or for a branch thereof, as may be audited, and accordingly, the information in these columns may have to be filled up, consolidating the expenditure incurred under various GST registrations. What is an important point to note here is that any expenditure that is incurred wholly and exclusively for the business or profession of the assessee qualifies for the deduction under the Act, and registration or otherwise of the payee under the GST Act has no relevance in considering allowability of expenditure. Any questions, anyone? Okay, so that's all for today's lecture. We have majorly covered the second part, part B of 3CD, clause by clause analysis. What are the reporting requirements and what the tax auditor has to do while performing the tax audit. ठीक है सर क्लोज करें थैंक यू सो मच बाय बाय